Welcome back. Hope you're having a good morning. Well, let's get some fundamental analysis going on some of the stocks we just discussed. Sid Khemka, the head of retail research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Morning, and hope you're having a good Friday morning. Well, let's talk about a couple of stocks that we just discussed. And the stock that was in lower circuit yesterday was Paytm, and in all probability will be under pressure yet again today. What's your view on that name?
Yeah, very good morning, Nigel. Thanks to be on your show. Lovely Friday, especially after the budget, where the government kind of managed to do a fine path of balancing between growth and fiscal prudence, especially when they are heading into the election. So I think a commendable budget from the government on that front. Coming to Paytm, yesterday, lower circuit, it's a big blow to the overall business where RBI has kind of restricted the Paytm banks business from doing any business from 1st of March. So the management has come out and clarified that about 300 to 500 crores of impact on EBITDA, which will be a huge impact on the part to profitability. If you see, the entire street was positive on back of some of these new age stocks, for example, Paytm, which was the first to start reporting EBITDA profitability, then followed by Zomato, and then recently we had PB Fintech, which also started reporting profits. So I think it's a setback from the market perspective. The profitability will definitely get pushed 2-3 years down the line. Management has clarified that they will be working with the independent third-party banks to ensure that the core business, that the operating business of the payments, that does not get impacted. But I think we need to be very watchful. We have downgraded the rating to a neutral. And as I said, we are very watchful on the stance as to how Paytm business model is able to navigate in this uncertain regulatory environment. Definitely, we would recommend to stay away from the stock despite any fall that you can see in the stock price.
Okay, stay away from the stock. Don't get tempted by the fall that you're seeing. There's still a long way to go before, the investor confidence comes back. And, of course, the hit that they've seen on their business. Got it. Siddhartha, hi, good morning. On Indian hotels, what is your thought? Because, the stock has already rallied about 30% in the last 6 months. Very strong numbers coming through. But at this price of 500 rupees, is the risk-reward still favorable?
Yeah, Sonia, good morning. So I see if you look at the overall hospitality space, they have done pretty well. And that is something that we have been talking about for last 2-3 quarters. FY24 has been pretty strong. There are a lot of large events that India hosted, right from the World Cup to the G20 summit. And the domestic tourism has also kind of taken a hit on the roof. So the budget also focused on improving tourism and developing several hotspots for tourism, so which should continue to remain positive. What we have seen is that overall numbers have been pretty strong for Indian hotels. The core rationale for being positive has been on the improvement in occupancy, which for Indian hotels rose 470 basis points on a Y-on-Y basis to 76.8%. That is pretty high occupancy for a hotel industry. Yes, December is generally, you can say, the best quarter for the hospitality industry. ARRs, again, we are seeing strong growth in the average room rents, which is again up 17% Y-on-Y to 18,000. Stock has moved up, but I believe that the upward momentum for the overall hotel space, hotel sector would continue on back of the strong numbers. We like both Indian hotels and Lemon Tree within that space. We have a buy rating, so we will be kind of upgrading the numbers post the con call, which happened today. But I think there is still room for upside in the hotel stocks.
Right. Siddharth, hi, morning. I mean, any stocks that are going out as recommendations today from your end at Motilal? One. And second, there are lots of, names which reacted pretty sharply. Aurobindo was down 7% yesterday. You had Fusion Microfinance. I'm not sure what the reason was. It ended 12% lower. Paytm we already discussed. Any thoughts?
Yeah, Prashant, so quickly on some of the top ideas that we are recommending is Titan. There is a broad-based growth, marginal disappointment in terms of margins because of the slower growth in the studded jewelry business, but management has clarified Q4 January is already started seeing improvement. So Q4 will be better than the Q3. This is one consumer name where it consistently does a growth of more than 20%. So that has been one of our top picks within the overall consumer space that continues to do well. There is issues with regards to some news flows that you said. Oro Pharma, was some news about the US FDA inspection in one of its plants where there could be some issues. On back of that, I think the stock price reacted negatively. Fusion Microfinance numbers will be coming on Monday. Last quarter, they had highlighted some issues, especially with regards to the regions in the Punjab region where the exposures there. There could be some incremental issues with regards to the book there. I think that is what the market has reacted to in terms of Fusion Microfinance. The numbers, as I said, would come on Monday. That apart, Aditya Birla Capital, that came out with very strong numbers within the NBFC space. I think the consolidated revenue grew 29%, PAT grew 39%. So pretty strong numbers. We have a buy rating on Aditya Birla Capital with a target of 220.
Siddharth, big numbers coming through over the next 24 to 48 hours. There is SBI's numbers tomorrow. How are you feeling about the PSU banks in general? Would you buy SBI ahead of the earnings?
Yeah, so Sonia, if you look at the overall banking space, the results have not been that strong, especially if you look at in terms of margins. The NIM compression continues, and which is where bulk of the issue is. Credit growth has been pretty strong, and that continues to be the case. Deposits is where, again, a lot of fight is happening, where deposit growths have slowed down and the CD ratios have gone up, where the banks are looking to grow the deposits so that the overall business look better. But between all these things, the PSU banks have run really well. Specifically, if you look at overall the smaller public sector banks, where the growth has been much higher and much stronger. Looking at specifically, if you talk about SBI, we believe that it continues to do well. Overall, growth has been pretty strong. It is one of our preferred picks for the year, and that should continue. But if you ask me, if you were to buy these stocks just before the results, it's a difficult call right now. The budget numbers have been pretty balanced, so that doesn't put too much pressure on the bond yields, and that is positive for SBI by themselves. So overall, for the quarter, we are expecting a 5% increase in the net interest income. The net profitability, however, we are seeing that could see a decline of 22% on a Y-on-Y basis, and that would be mainly because of the increasing in provisions that we saw some of these other banks also did for the newer regulation that has come out for. So clearly, I would wait right now if I am already not invested into SBI for the results to come out, and then would look at getting into the stock.
Okay, all right. Sid, yesterday at Shree Cement, that was an outperformer. There was that news with regard to that income tax issue that they had. Valuations are very, very elevated, but the numbers that they delivered look very, very good. And now the commentary that's coming out of the management is a little bit more better. I think the stock is clocked closer around 30,000 rupees after a while in yesterday's session. What's your view on it? Expensive, but it could get back to its winning ways in terms of growth. How would you view it?
Yeah, Nigel. So I think you summed it well. The results were pretty strong, and we have seen that the entire cement pack have reported very strong numbers. And Shree Cement too also, they also reported strong numbers. Plus, the management has highlighted that it has revamped its brand strategy, has launched the Bangur as a master brand for all the products, which should help achieve the company's objective to increase the market penetration and project the products as a premium product business. So we are positive, but as you said, stock is trading at a premium valuation. So on a EV EBITDA, it is trading at 19 times FY25 and 17 times FY26. The near term, on back of these strong numbers and management commentary, stock could do well. But given the premium or the high valuations, we have a neutral rating and a target price of 27,700, somewhere about 28,000. But if you see say there's other stocks within the cement packs where valuations comfortable is there as well as growth is there. So Ultratech is something that we like. Dalmia Bharat within the overall cement pack is our top pick from the cement pack.
Siddharth, any thoughts on some of these stocks, in the broader markets that came out with their numbers, whether it's something like an Indian Hotel, something like a Bata? Bata is, of course, down 3%. Indian Hotels is up 4.5%. But in this space, what would you like?
Yeah, Sonia. So I think if you look at the broader market, the results have been pretty mixed. That's the case that has been, as I said, some of the stocks that we like, Max Healthcare, that came out with inline set of numbers. Despite Q3 being a seasonally weak quarter, the company exhibited healthy mid-teen growth of about 15%, both in revenue and EBITDA. And the EBITDA per bed continues to inch up on back of improving operational mix. We believe that the company is on track with its bed expansion program. We are very positive on Max Healthcare. It is one of the leading hospitals delivering consistent growth. And we see an upside of about 16%. We have a target price of 930. That apart from the NBFC space where there is a lot of pain, we saw Capital coming out with this strong set of numbers. We already discussed that revenue grew 29%, PAT was up 39%, and we have seen growth across segments. So basically, we are seeing that the company is kind of seeing significant improvement in the operational metrics across business segments. And the asset management business, we are seeing some of the other standalone AMCs reported very strong numbers. So that looks like with the capital market gains, the kind of domestic flows into the AMCs, that is another segment that is doing well for the AMCs, standalone AMCs, as well as for the Aditya Birla Capital. So we are expecting a pretty strong set of almost 40% earnings CAGR over the next 2 years for Aditya Birla Capital, and hence we believe that stock could also do well within the NBFC space. So we have a buy and a target price of 220.